What's going on? How we doing, everyone? Back once again. So just to start things off, we had this really nice move yesterday. Remember we were saying we wanted to see this downwards move come? We were up here yesterday. We were explaining how your initial entry would be here and your stop would be above the high. So how you capitalize on that is up to you. Now what I did was I used some of the lower time frame money in, money out principles and took entries accordingly, using this as the preliminary point for stop loss. And it was a really nice move. Again, we gave that out completely free in the Discord. Let me show you. Right here, this is the before chart. The live pricing on there. Obviously, if you're in the Discord, you would have seen this anyway. Really nice. So today, we're looking at these highs. If that's what it wants to deliver, that's what we're looking to follow. Down into these target lows. Now remember, yesterday we had an entry that we said we could take if it came back, but it actually came all the way down into our target lows, took out most of the major target lows before coming back. Now it has come back and reacted from there, but unless you're leaving your order and you're readjusting your targets, it's not going to be the same setup. Now for us, that's too long of a period of time to be taking that entry off of the same principle here. We would look at this more as a reconfirmation. If you reconfirm, then you can look to sell it. Now we did reconfirm here. You'd have to use that as your stop. Ultimately, we'd rather see a new sweep happen. You see a higher time frame sweep happen, it's just going to reconfirm what you thought you might have seen. Now there is in here a 1 hour high, sorry, not 1 hour, 4 hour high. So if you're using that principle there, the 4 hour high being swept, then that would give you an entry on its own, like so. Again, we have lots of exciting stuff coming for the next few weeks or so. We have, what's going on, brother? Hope you're well. I'm doing well, thank you, my man. Hope you're doing well. So if you're using the Asia high as your sweep point, I'll show you this here. So if we go to this and we change the boxes, you can see. Remember, we're not interested in anything outside of a 4 hour sweep. So if this is your 4 hour high, and the previous 4 hour high here, it's going to be that point and that point. Exactly as we said, the money in, money out points within a validation area. In this case, we're using 4 hour highs. So very soon, this money in, money out indicator is going to become available. We will update everybody when that is available. The automatic trading bot is also coming very soon. So if you're not already on the shortlist for that, recommend jumping on the shortlist if it's something that you'd be interested in. And the only expenses that will be incurred will be the minimum investment for the broker that you're putting your funds into. So it's very usable, and ultimately it's going to deliver while you're sitting around doing nothing. So going on to GU, we gave this out yesterday as well. We said that, and this was in the live stream, so you can go back and watch that. We said, right, if price comes back, taps into here, we can sell down. If we run the low and the low, we're cancelling that order because the points of liquid have been met. Now, off of this same principle, price has come down to those areas and run back. Now it's starting to sweep more highs, and it potentially could run down again. Now, today we do have relatively high amounts of high impact news. This is something to keep in mind. In 2 hours, 10 minutes, we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 red folder news events for the US dollar. So please be careful and mindful when you are looking at trade ideas. Ultimately, there is going to be some setups coming, yes. Why have we got this one? Right. Oh, what? Oh, let me change that. There we go. But I really recommend to be cautious with it. Now, as I explained before, you can see our bias. Oh, can you guys actually see that? 1 second. Oh yeah, you can. Cool. You can see our bias in the top corner. So we don't need to do any higher time frame analysis. This will change. This will change when our bias would change. Okay. So the same thing happening here, right? If and when we take out highs, we look for the continuation in that direction. Now, in this case, we've taken out highs, right? You can see that this right here was the high that was taken out. Now, it was very minor. It was swept here, very, very minor, and it did give a space. It did give a space. Now, if you took the trade off of that, it's going to give you pretty much the same entry you were in before, and price action came up and took you out. Now, if that was a losing trade there, that doesn't change the statistics on the next entry that is possibly given. Always remember that. So you can see the points that we're looking at within price here. Now, if you look at euro, we have these two relatively high liquid points that are sitting here. So I believe that there is potential for them to run up here, and you can see the lower targets lining up very nicely. Obviously, this last one is a bit of a move, so the probability of getting from here to here is not as high. But if we go down to the 15-minute, again, not in this trade, if we take it from a point like so, and we start to look at those areas, you can get your 1 to 3, 1 to 4, 1 to 2.8 before you get down to the 1 to 8. So it has potential to deliver those points. I would really just exercise caution on the current price action because of the high impact news this afternoon. Now again, some people don't trade at all when there's high impact news. Some people trade regardless. So that's going to be down to you, whether you tried to do it or not. Morning Void, hope you're well, my man. So again, this area right here, we highlighted this, we said this is an area that price could very well sell from. And this is based off of sweeping the high here and delivering our new money in, money out schematic. We're now looking for that expansive move down. Again, I am not in this trade. That's just a point to look at. And it would begin to target the Asia low. And so on. Okay. So the Euro NZD move that we called yesterday was beautiful. I've fully taken profit on any positions in here. And as I explained before, I took the initial trade, which was, I believe, down here. Then price action pushed higher, and I waited for a money in, money out to happen again. So I had a higher position and a lower position, both with minimal risk, using this as the stop loss. So you have two variables and it gives you a greater RR. Anyway, for anyone that was wondering, I was aiming for this. Was it this? No, sorry, the open gap here. So again, we're not holding our breath for that extreme target to get hit every time. Now, there are coincidences where it can get hit, and it does get hit, and we know this. But how often does a daily time frame go up and just straight down? Not very often, right? It normally comes in, it creates substructure, creates intermediate structure, and then plays lower. And that's based off of the way that the institutes are delivering their orders across the larger scale of liquid that's being moved, right? So the larger scale of it is being divided into smaller chunks, which causes this substructure, intermediate, and the overall trending structure. Thank God I'm well. Good stuff. I'm glad you're well. How and when will we get these two indicators for daily bias and the entry areas? So there's going to be ultimately a complete range of indicators that are going to become available. They are all going to be completely exclusive to the PIP Surfing Society members. We are going to make them in some form into like different packages. So there will be like your individual money in, money out. So like this, I'll show you. So it will showcase every form of money in, money out across every time frame. So you can go away and you can use that however you like. There's also going to be the V2 version of the Keep It Simple system, which is going to be based off of the daily 4-hour and the 15-minute, which is the time frames that I personally use the system within. And the reason I've decided to do that is because I know that it consistently gives good potential setups on those time frames. So that's the time frame we're going to focus on for our core indicator. Then there's also going to be the, I'll show you on here. So the entry fee one, and the money in, money out, and then daily bias. So they're going to be 3 individuals or as a collective. So I think it will be, I'm hoping it will be before 2020. It will be before 2025, so before the end of the year. And obviously we've only got like, 4 weeks left before the end of the year. So within the next few weeks, we're looking to get those out the door. But we want to make sure they're right. We don't want anybody picking up any indicators that aren't correct, right? Because that's just, it just doesn't help anyone. So that's what we're looking to do. But you're in the Discord anyway, so you'll know. You'll be updated and everything. Views on German 30, yeah. So I'm pretty sure we're bearish or we're bullish, apparently. Yeah, bullish. 4-hour. That looks horrible. See, I don't really look at this pair. I don't really watch it, but there's some pretty clean sweeps, move, sweeps, move. We've just swept these 2 lows, and then we have a low right here. That would be a liquid point after this candle closes, if this candle closes, should I say. The reason I say if it closes is because it could come back up to the high. Obviously it's going to close, but I mean if it closes down here, it could come back up to the high and take that out, and it wouldn't be a high, it would just be a high or low on a smaller time frame. So we could look down into the 15-minute now, but I think if we are not mistaken, that and that, see the way this is what I was explaining before, how this is the bottom end of a gap that was left. So I wouldn't be looking to these gaps to give us a clear point to go long or short. Generally, they're going to be swept relatively heavily, not all the time, but we filled the gap here at the top, and we literally came straight back down for the rest of it. So the same principle is in play here. We had these two lows taken out. We had a short-term area given here. Price, of course, came flying through it. Bias is bullish, so if you'd have taken that long move there, you would have been taken out. But like I say, we don't really want to work off of gaps. They're not true liquid high and lows. The true liquid high or low would be here. So on the 4-hour time frame, price coming down to here. And to this point to go long. So see the way this is a true liquid low. This would possibly, let's have a look. Yeah, that is true liquid low. This is the 4-hour low that we were talking about a minute ago. Can't even draw anymore. Okay, and you see the money out. Well, yeah, money out, and then money comes back in here. So you look to go long from that point. When it's a true liquid low, the probability of that expansive move comes a lot cleaner. So I'd be looking for more of a run down. So the money that was moved from point A and point B, they're ultimately reallocating it into a better position to go long from. And that position is here on the 4-hour chart. And notice, this is another thing as well. Notice how all of these 4-hour highs are taken out. Why were they taken out? Well, our bias is for price to go up. Now you've got the same thing happening here. These liquid highs being accumulated. So if we come down, we take this out, we'll look for the new high and possibly another high to be taken out again in the same narrative. Have a look on the daily. So that's a daily low right there. I don't believe that's the 4-hour low though. That's the lower point. The lower point right there. We'll see. I'll be looking towards this rather than the lower one. Extra targets, that's awesome. Good stuff. So we did have an alert go off earlier. This is the V1 version of what I explained to you guys earlier. Why we're having alerts going off, but it's not really working as it should be. We can get rid of these. Where was the alert that we had go off? We had a GA go off. Yeah, so we're running highs here on GA. Our bias is bearish. Go back to the 15-minute. So let's go to the 4-hour. Now, this version of the money in, money out model only has 4-hour visibility for the highs. So when you go down to the 15-minute, you can't see them. Hence why I'm highlighting these. The new version is going to have that feature, so you won't have to highlight these. So from here, these are your 4-hour highs. We highlight, and again, you could easily depict these points as your 4-hour highs without going to the 4-hour highlight and then coming back down. But we're showing you the simplistic way of doing it. which is price action giving you a clear narrative to go a certain way. Now, this has just changed to bullish. Just confirm this. Okay, it's saying bullish, but we haven't formed this gap yet. Okay. That's something that's going to need adjusting. But that's fine. That's why we're having different versions of it. Yeah, so you can see in this point, the high is swept, so we track the money in, money out. That's your money in. There's the movement. Of course, it comes up beforehand. You know, none of these trades are hardcore winners, but the principle is, where would you orientate yourself if price was actually going to make a longer term move? Now, keeping in mind the same principle we spoke about, are these points long term high points of liquidity? No. We know this because they are just internal movements. This is a high point of liquidity. This is a high point of liquidity. This is. So if we get to one of the higher points of liquid, it's going to be a lot more probable. So this again is where your discretion is going to come in. Now you can apply a couple of different things. And those things are of course, excuse me, what time of day is the high formed? Because then that gives you an idea of the volume of orders that are passing through that structural point. So here, 10 p.m. Is that a true structural high? No. Here, 2 p.m. Is that a true structural high? Yeah, 2 p.m. is a pretty good time. And then here, 10 p.m. No. So you can pretty much write off the external highs there and only focus on the middle one based off of that. But it still puts it as an internal structural point, not an external structural point. You can also look at volume points as well. So when you have a higher point of volume, it can give you a high or low more probability based off of the fact that you know there is a higher volume of orders running through the area at that time. Again, you don't have to do that, and we haven't incorporated that into the model itself. But some of the better trades that we've had run for a longer period of time happen during the Asian session or happen on the back end of a day. So let's go back over to chat here. So the indicator bullish or bearish based on the gap. Yeah, so it's based on the most current shift in higher time frame liquidity. So based off of the gap itself, it gives you a pretty good idea of what direction Institute are interested in taking the market. Now, I've had people say, oh, that's too simple, or that's not, that doesn't give you anything. But go and check the higher time frame, and again, not to you directly, Akram, but check the daily time frame. For example, let's go back here, right? Look at the way that when we get these areas formed. Now, I appreciate that they're only formed after the third candle in the sequence, but look at the way we produce this area, and this is daily time frame, and then price delivers. These are day candles, these are daily candles. So we have from the point price delivers that, so it'd be this candle closing out here. So after that, we have until the next candle, we have 62 days of bearish price action, ultimately giving you 1,000 points to the downside. Then, yeah, you might have taken some shorts in here and lost. Then we get a bullish indicator given right here. This candle closes, and we have 270 points to the upside. Yes, we have some downside moves, but these are where you're sweeping your lows to get those long positions in, right? And that's 23 days of bullish price action. From here, we're delivering bearish for 12 days until we get a new move, and it gives us, on average, more consolidation than anything. But the idea is, this is why we track the 4-hour structures, so that when you get this gap delivered, there'll be highs in here. So when this price action comes up, you trade it down. When it comes back up, you trade it down. You're not trading from the point of the gap being created. Then at this point, we create another bullish gap. Again, from here, we're still traveling up at this point, 315 pips from the initial gap creation, not including trading it from a pullback, which is what you would be doing. Again, same thing. Pull it forwards here, and let's see. So we're still bullish bias because of this. Price still travels up. Still traveling up. Okay, we're pushing down now. Still travels up again. Remember, each time it pulls back like this, you're looking at 4-hour highs being swept. 4-hour lows, sorry. Again, 4-hour lows, you're looking at them being swept to go long. Same thing. Still long. How long is it going to go long for? Right, short. So now we have more of a bias to go short. So we'd be looking for price to pull back into this sort of area and then go short. Now we're not looking to trade from the actual money in, money out point itself. And again, you could call this supply, you could call this demand, you could call it whatever you want. But we're looking at it as a broader sequence of events, which is money being moved from one point in the market to the other. And based off of that principle, it's as simple as it can be. You don't have to worry about understanding the supply and demand dynamic. You can just have it as a clear understanding that the market has a potential to go lower. So we'd be looking for 4-hour highs in here, price to sweep, and then travel into some of these daily lows. Okay, let's see. Okay, so we do have a small sweep and then price travels down. Bear in mind, these are daily candles, guys. Daily candles. So all of these candles you see are whole days of price action moving in the direction that we, okay, now we're bullish, so we now look for price action to go long. And it continues bearish, so we were wrong in that time. Well, it actually goes bullish in the end, but we were still wrong for 4 or 5 days, right? It just went down. Then we have a bullish bias, so we're looking for price again to pull back into areas within here to go long, to aim for higher time frame structural highs, right? So it's very easy to follow. Okay, so we're pulling back, bearish bias, we might be wrong again, bullish bias, that's fine. Notice again how these areas are created, and then you have at least 2 days of bearish price action. Here, this is created 2 days of bearish price action. Here, created 3 days of bearish price action. Bullish, created from here, 4 or 5 days of bullish price action. So even if we have higher time frame things telling us, you know, this is maybe not the best idea, we follow the principle because we understand that the chances of it going in that direction is much higher. There are some points like here, but then you've got to ask yourself how many 4-hour highs that are being swept are giving you an entry in here. Generally not many, right? So it's a very simple yet consistent way to follow and apply a principle, right? Look at gold, please. Yeah, of course, no problems. So gold, we have a bearish bias here. And this was because of the gap that we opened up here. Now, we've discussed this with a few of our members, including Akram, who is very adamant that gold is going to sell. And I was bullish on it until now. Now I have a bearish bias. So coming down to the 4-hour, you can see a very clear point. So throw your mind back to where we were. Let's just delete these. Actually, let's leave it on there for now. Every time we form one of these areas, we're not looking for price to tap into the area to sell from that. We're looking at relevant points between here and here, where there's liquidity stored, where if we get a given reaction, it can tell us that the probability of price traveling in that direction can be higher. When we come down to the 4-hour time frame, let me just get rid of these. We can look at this and we can say our bearish is bias. We have a 4-hour high right here. If price pulls up to here, what is everybody doing on the retail side of the market? Excuse me. Everybody's buying, right? Now we did actually have, before this gap was formed, we did actually have a bullish entry given, and we explained the entry yesterday, and I'll show you it right here. And it's from this point. Now it happened at like 8 AM. I wasn't on the charts at 8 a.m. But a really nice move out there, based off of the same principle. We swept multiple 4-hour lows. I believe it's these points. This was 6:30, and then this was like midnight. So we're not trading that. We understand that. The cleanest money in, money out sequence that was given was here, which was 12:15. Didn't tap in until 8 a.m. and then we've run bullish from there. Now, let's say you didn't want to trade either of those. Where's your next money in, money out sequence? Here we come up. There's money out, money in. So that would be your next point of entry. The same principle applies. Where is the next point of entry if you didn't trade that? Well, it would be right here. You know what? Let's just save some time. Just turn this on. All right, okay, so you can actually see it's there. So it would be right here. So you'd enter at that point. Or, sorry, you wouldn't enter. These would be your points you'd be looking for as relevance. You'd look for here, 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 to go longer for that because of the understanding of what happened over here to the left. We took out the liquid, right? Now we're using the same principle, come back to the 4-hour chart to look for this, right? When everybody's going to be longing it, price is going to start to move. Exactly the same as what happened here when it started moving really bearish. What did everyone start to do? Shorting it, right? Now it's going bullish again. And this is what happens on a retail basis every single day. Once a move has happened, retail jump in on top of it, and then the counter move comes, keeping them consistently on the wrong side of the market. Gold bullish until further notice. Okay, Floyd's changed his bias for short term. Looking for 663 and see what price gives, but not selling it yet. 663. Yeah, see that's up into this area anyway. So I'm looking for 689, 689, 690, around that kind of area. That's what I'm looking for, down into those lows. And you can see as again the clusters of liquidity. Whereas if you look at the highs, they're relatively far and few between, stretched out, whereas the lows are very like clustered. That again is a good sign. But again, remember everything we show you, everything we teach you, you can learn it all in the Keep It Simple series. Head over to the playlist and you can find it in a very simple, easy to learn layout. And you can apply this to your chart. So Euro A, this is the one that says bullish bias, but we're actually bearish. Yep. So 4-hour high's been swept. Let's have a look. Okay, one's market close or Asia high, which is here. Okay, so there's potential there. We'll see if this comes back down. Again, this bias is technically incorrect. We haven't finished forming the daily candle yet. That was the NAS setup that we spoke about yesterday. Price action during New York Open, exactly as I said. Went pretty choppy, that's fine. Take a loss on it. Whatever, it doesn't really matter. This is something, you know, a lot of people would go out their way to be like, oh, quick, delete that. Yeah, don't let anyone see it. Quick. It doesn't matter. You take a loss, you take a loss. It's part of being a trader, right? That's how it works. You've got to pay the fees. You want to play the game, you've got to pay the fees. This was an idea that we spoke about in Discord yesterday. Didn't trade it. Again, we're getting into the latter half of the day here. This is the market close right here. And this is just based off of the bias that we had previously from up into here. Now we took out a daily high, and that was where price actually decided to change, which again is part of the way that the liquidity system moves. Now, you may look at this and say, oh my God, why are you just longing? Well, until our bias changes, we continue to follow the same principle. And you will know this doesn't happen that often. It does happen sometimes, but it doesn't happen that often. A lot of the time we're on the right side of the market. There are scenarios where we're not, and that's just the way it goes, right? Just the way it goes. So back here, this is another one. We had a bearish move here, and price action moved up. So it doesn't happen very often, but you do actually see this. You get that bullish move given, and price moved up, but didn't deliver a gap. So we're still longer term expecting this to come down. But for now, no real entry being given because we're not taking out any highs. Notice how we're only taking lows, not taking highs. So if we were lucky enough to get something along those lines, we would look for that. So when we get the finished version of our new indicator, it is going to give you literal alerts to tell you that an entry zone has been made. So it's only going to alert you the entry zones that are in your bias direction because it knows the bias, and it's only going to give you the entry zones that are delivered after higher time frame areas have been swept. So it's going to do literally everything for you. Long bias sell today, order flow, bullish is hedging, price action. I don't trade that kind of price. Yeah, that's fair enough. Stairway up, elevator down. Exactly. Just like this, right? Stairway up, elevator down. Again, same here. There's an area here, but we're not interested in selling from here. If it does move from there, you'd expect it to come into these lows. Again, I'm not interested in selling from there. Remember what I said earlier, there is high impact news coming, hour and 30 minutes. So don't expect anything crazy from price beforehand. So again, still bullish on this. Go back to the 4 hour. We did take out a low in here. Let's just have a little look. So the low is there. There's the low, you can see it on the screen. So the low was taken out. What time are we here? We're 3 AM. So that would be your initial point for going long. Price action would have taken you straight out. Your next money in, money out doesn't come until we move away, and it comes from here. Does price come into there? It does, and that's where we're playing off currently. Again, Euro GBP, not in the best position at the moment. What's this? Euro USD. Just got an alert saying Euro USD bearish area created. That's not correct, but okay. Have a look here. Gold, we're still looking for that price action to go higher. Honestly, I think we're probably going to end up being still for a little while until we actually have news come in and give us a move. Remember the daily structure as well. This is a daily. Here. So, even though our bearish bias is in play, or sorry, there's a bearish bias in play, because this is the daily low, this is the only time that we will say that a counter move could be likely. And it's the money in, money out scenario, but at the point of a counter trend area of high liquid. Now, if you want to learn about that, you can go over to the Keep It Simple series, and we teach it in the counter trend or counter trade, YouTube video there. You can find it there. So let's just keep an eye on this. Don't really need to hit a again, we have news coming very soon. I say very soon, relatively soon. So don't get your hopes up for any A+ setups coming out of the market just now. Okay, USD JPY, let's see. Let's see. Remember, this is counter. I'm not interested in trading this again. I'm honestly not really too interested in taking any positions before all of the high impact news is coming this afternoon. I think it's just a much safer scenario to leave price action when it's in a condition where it's preparing for a big move, just to do its thing. You know, it doesn't hurt to give yourself a space between high impact reactions and the preparation for that, and you normally will see it as well. Again, this is a completely counter in terms of the current trend. Price action moving from here, and that's based off of the high area of liquidity that was contacted and the money in, money out schematic that formed after that. What's going on, BX? Hope you're well. Quick look at US 100. Of course, my man. So from here, we're still holding that bearish bias. Remember, a lot of high impact news coming up. Come down to the 4-hour. We have a cluster of highs sitting right here, and we have lows that are just consistently delivered to the downside down here. So what I'm looking at is a run of these and then a potential sell-off here. That's following the bias basis. As always, we can see this is going up right now. Great. The current intermediate trend is up. We know this. The probability is that this will put in a new high. That's the higher time frame narrative and the collective movement that is happening on this pair. But as it stands, using this bias and the principle that we obviously show you guys, we'll be looking for an interaction with these highs to then lead us into a potential move into some of the lows. Because of the high impact news coming, I think it could just invalidate the potential for a trade on this today. But we'll see. We'll see. Exactly your plan. That's amazing, dude. Great work. So yeah, I'm looking for run up into here and then push down through the lows. We'll see. I think it has a high probability of delivering. If not, it's just collecting all of the liquid sitting at the highs here. But these just seem too good, don't they? The price action not to just then maybe form that high. And remember, you can use the money in, money out system on the weekly time frame. And you're going to see a similar scenario. Again, there's always going to be points like here where it doesn't deliver anything, it just keeps going bullish. That's fine. But you'll notice that shortly after it begins to invalidate, actually gives you the bullish space. And these are weekly candles. So remember, when this is formed here, it actually forms there. So we have 2 weeks of bearish price action. Then we have the subsequent higher movements for X amount of weeks. And you follow it back, you have the same thing. Notice how these spaces, so your bias would be bullish from here. Your bias would be bullish from here. Just the same as this, your bias would be bearish from here. Your bias would be bearish from here. Your bias would have been bullish from here. Your bias would have been bearish from here. So a lot of the time you're going to be on the right side of that movement coming in, and this is why we're building one of the automated trading bots, because what it's going to do is going to allow us to actually have a system like this in place. So when a bias bearish comes in, we can enter sells within that region, and we know for a longer period of time we are most likely going to see the market sell. Now there of course are going to be scenarios where a stop loss will be in place and we will take a loss. That happens. We know this, right? I've said it a million times, you know, there's always going to be someone that can apply a filter to a demo trading account or a real trading account and show you only wins. You know, but that's not the realistic way price happens. What's going on, Andre? Hope you're good, my dude. So get rid of this. Let's see this. If you check your DMs as well, Andre, I'd send you a little something. Yeah. So back to Euro. Remember what we're looking at here on Euro. These two highs. Of course, BX, no problem, my dude. No problem. And this is one of the beautiful things. You know, you're never going to see a system that has such little work involved that's going to deliver such long-term biasing outcomes. I mean, even if you apply it to, let's say, like the 15-minute, you're going to see, generally, not always, you know, generally, when the biasing is delivered, if you are using a smaller time frame to confirm it, so for example, you're bearish from that point, you're bullish from this point, you're bearish from here, you're going to see something along the lines of this. So you have your biasing given, and then price will normally pull back to some degree, then go long. And obviously, if you're biasing long, you're looking for that pullback to sell off or to go long, for example. So very, very simple. And again, this is the 15-minute chart on Euro NZD, and we called for bearishness on this yesterday. We had a beautiful overnight run. Again, we were aiming for this for our higher sort of intermediate targets. This is obviously the long-term target, but we'll see. We'll see what's going to happen. Now we've come down to the 4-hour here. See the way that we had the initial sweep where we called the sell from. We actually formed another sweep within here, meaning that there is a chance that you'll see a re-entry. See this? That's your sweep. And the re-entry is there, but it doesn't actually deliver to it. But you can use that to reaccumulate orders based off of the principle that you're using the initial sweep of higher time frame liquid as your protection point. Again, same thing. Still looking for these highs in euro. I believe we have an alert set already. Yes, no problem at all, Andre. That is completely fine, my dude. Remember, if any of you guys are on LinkedIn and you want to follow me on LinkedIn, just search for me. You'll find me. Or search for Pip Surfing Society. You'll find me through that as well. I'll happily connect with you guys. German 40. Still, we're looking for that push down. We're still getting there at the moment. Great. Remember, there is potential we could run the low and then come back into the highs. Go to the daily. That's your daily low. So it takes us down to the lower point of liquid. So if we do the reverse of what we're thinking and we come down, take out the daily, and we're still bias bearish or bias bullish, then we would have to look at this as a scenario for counter. If we were bias bearish, that would be a scenario for potential buys. If we're bias bullish, that would be a good place to long from. So, does anybody want me to look at any particular pairing? So UJ, again, this is a counter area based off the fact that this is liquid to the left. We've taken that liquid. This is now a high probability liquid transfer area. Doesn't mean that it's a high probability setup. And that's because it is counter the bias. This is the only time we would ever say that a counter move could be likely, which is off of the daily being used as a point of liquid and that being transferred across in the current entry time frame price action. And again, the reason I say current entry time frame because it depends what time frame you use. You can reference the same principle across any time frame. Like I've said before, we have Alex who establishes a bias, I believe, on like the 15-minute. So for example, today he'd be going bias long. Let's rewind it to like here, and then he'll go down to the 1 minute and he'll use the money in, money out indicator, and he will buy at the points of money coming in and money coming out. So wait for money out, like so, wait for money in, and he will buy at that money in. Price action delivers to that point. In this case, it was a short term. If he didn't get triggered in here, he'd wait for his next one to come through. There it is. Bought there. Price action takes off. Again, he'd wait for another one to come back in. Buys there. Maybe he took a loss. Maybe two losses. Again, what is this? Oh, it's Asia, so what we're expecting. But even with less than a 50% hit rate, you bought here, beautiful long. Bought here, your order doesn't get executed. You bought here, you get taken out. Bought here, you get taken out. Bought here, you don't get tapped. Bought here, beautiful long. So even if you have less than a 50% hit rate, you're going to be able to pick up a substantial amount of longer term moves because you're following, same as here. And you put your stop under here, your entry there. It's a beautiful move. I don't know what that is in RR, but it's a beautiful move, right? Same here, this comes in. Look at the expansive nature of that. Again, I'm not saying do that. He has taken the time to backtest this and work it around what he likes to do, which is gold trading on a lower time frame. But it shows the principle works. We also have Akram as well, who's applying it to different time frames on different pairings. So it's completely usable and flexible because the principle and the understanding the way that the trading market moves itself doesn't matter what time frame you're looking at because it's fractal across all time frames. Fractal across all time frames. So it really doesn't matter. And for anyone wondering, Alex is in the US, so he actually trades on the New York session a lot of the time, not the London session. So he won't be trading this current price action. And if I'm not mistaken, he establishes his bias based off of the same principle. Look at that. What's your bias? Okay, my bias is bullish. Brilliant. Trade it up. Simple as that. Yeah. So it is very, very usable in that element. We can look down here. In principle, if our bias is bearish because we're on the 15-minute, we're looking for that bearishness. Cool. Look to sell from that point. Price takes you up. Cool. Look to sell from this point. Price takes you up. Cool. You get the sell in the end. In that case, it doesn't work. I'm not 100% how he's taking his biasing from it, but the principle he's using is the money in, money out principle. So it's very usable across multiple time frames. Nice tap in there if you're still bearish. I believe the bias shifts around here. Yeah, so bias shifting. Down to the 1 minute, now you're looking for that buy side to come in. And this is the price action we showed you a minute ago, I believe. Yeah. Again, I'm not massive on the 1 minute trading, it's too time consuming for me. Not massive on it. And I've heard before people say, well, it's not time consuming because it's a smaller time frame. Well, it is. It is. That's the simple answer there. It is. Higher time frame trading is always going to be less time consuming because your trades run over a longer period of time, meaning that you have more time to do less. On a 1 minute, you need to be there managing it, doing this, doing that. Yes, you can make money in less time, but it also means you have to be more involved. So let's go back to you, as if you just sitting in there, just sitting in there. Again, it doesn't really matter to us what way this goes. It really makes no difference to us. We're just looking to show you guys a principle of what we teach in one of the Keep It Simple lessons, which I will show you the thumbnail for right now. Remember, if you haven't already, guys, hit that like button. Appreciate it. Where are we? Here. So it is this video right here. Right? This one. 9 minutes 41 long. If you're wondering why I watch my own videos, because sometimes they don't actually upload the way they should. So it's always worth checking. I've had a couple before where I uploaded it and half of it was silence. It was just me drawing on the chart with no talking, which was completely pointless. But yeah, that is the video that we explain this concept in detail, and we show you examples, and we actually have an example now. So it could be a really good live example of this. But go over and watch that. If you haven't watched that already, you'll enjoy that. If you understand the Keep It Simple system as a whole. If you don't, then obviously watch the series from the start. this is another thing as well, like the series itself is relatively short. You know, it's not like a classic ICT lesson or live stream where he rants about bullshit for 3 hours and gives you 5 minutes of stuff that is good, and everyone goes, whoa, if you actually watch 4 hours, you get 5 minutes of education. It's like, yeah, that's completely fucking backwards. Just teach it and be done. That's why the system that we teach is confined within such a small section of videos. And a lot of people will say, oh, it's impossible to learn a system, you know, off of 2 hours of videos. Not correct. So we are going to wrap up the live stream in a few minutes' time. I do have a brand new sofa being delivered today. I am working from home, probably sounds a bit echoey. I have a brand new sofa being delivered in between, I'm pretty sure it's like now and 3 p.m. So what I don't want to do is be live and have to cut it short really quickly because they turn up to deliver the sofa. So what I'll probably do is just wrap it up before they get here. And then you guys know where we're at. We get to finish in a good way rather than me running off to go and take delivery of this new sofa. So probably another 5 minutes or so, and then we're going to wrap things up here. But you guys know what we're looking at. We've discussed our euro potential. We've discussed that the area it's in now has potential to push it down into these short-term targets. Again, I'm not trading that. I want to see price action push into these highs, as I've shown you in this chart. Again, if you want to understand why, watch the Keep It Simple series. It will break it down and you'll understand the principle of that. We have the NAS 100 that we're looking at. We want to see price run into here for the sell side to come in. If it doesn't and it runs bearish first, there's potential for a counter move here if our bias remains bearish. We also have Euro A, which could potentially continue selling. This is a false reading here. This is the first version of this indicator. We have the German 30 as well that we're looking for run down into these lows. What else do we have? The counter scenario here for USD JPY, and again we explain the principle and reason why we expect this to go long from here in the video I just showcased you guys. It's already starting to reject from there, which is great. Again, we're not telling you it's going to go long and it's going to stay long. We're just saying there is potential for a move up from here. If there wasn't high impact news, I would be more inclined to actually trade that, but I'm not looking to get involved with the trade before news comes. But it's always important to assess the environment that you're trading within or that you're willing to enter the market within. Applying these basic filters to your understanding of what's happening on the charts is going to actually give you a much better chance. You know, the days where you take trades off of impulse to trade are going to be the days that you lose. The days that you actually sit back and you say, I don't really like the way this market is right now, and you sit back and you don't trade, are going to be the days that you'll do the best, because you're going to be mentally telling yourself to do something. You're also not just entering a market for the sake of it. The other point that we're looking at is, well, we did sweep the previous higher on GU, but we're looking for that high push again. Notice how GU, EU running up to these highs would in turn give a bearish continuation for UJ. But again, this is a counter move, so we're not telling you price is going to run bullish now. We're expecting a potential bearish move. Remember, if we're looking at a trend or we have a bias, we're looking at something like this. That's our biasing, right? The only part of this movement and the bias that isn't guaranteed is the part where it comes back to where you want to buy it from. The bit that is guaranteed within a trend is the part where it goes in the direction you call it. Not necessarily in the direction you call it, but the expansive nature is the only thing that is guaranteed in a trend. So when you see a counter, you're pretty much going in against what you know is the guaranteed movement within the market. So we're looking now to, what's the time? 2 minutes time, we're going to wrap this up. So again, you can already see the rejection from here. Really nice movement there. Really, really small at the moment. There's nothing really to follow on that. News is coming though, so just be cautious. Let's go back to Euro USD. Again, same thing. If we see a sell-off here, great. Not looking to trade that right now. That's my cat standing on the keyboard. Euro M, we're still bearish on this. Go to the 4 hour. This is a point where we could come back to if we want to sell again. But for now, we're just going to look for this to run down into the lows. Okay. So UJ is a counter. Yes, UJ is a counter move. And it's based off of the principle that we show in the counter trade video on YouTube. That move is here. Now, the reason I say it's counter is we have a bearish bias established, but I believe on the daily, we haven't actually formed that gap yet. So it is theoretically in line with what we're looking at. The main reason I'm not trading it is because we have such a high amount of high impact news coming. We have 10 or 12 red folder news events coming. Just don't really want to be involved with anything. Right, so we're gonna finish the live stream here, I think. And we will be back tomorrow at probably a similar time. We'll also be giving updates in the Discord with the new indicators when they release and the packages that are going to be available for those. Also the way that the new structure is going to work. So yeah, appreciate everyone joining. If you haven't already, then drop us a little like. And if you're not a subscriber, then you know where that button is. And I'll see everyone in tomorrow's live stream. Remember, you can join the Discord if you have any questions, you want to showcase your work, all that kind of stuff. You can do that in the Discord. But I'll see everybody then. And I hope everyone has a great rest of their day. Remember, just be cautious because of news and trade safe, as always. I'll see everyone tomorrow. Peace out.